Good evening, folks. Thanks for joining this webinar. You did have a choice, but you decided to join here. Thank you. Thank you for coming to this webinar. Really appreciate that. So today's webinar, what we wanted to share was how to generate 10x returns using technical analysis. The context for this was last week, we played a peculiar stock, which I'll be revealing very soon. But that stock, which we didn't, we thought it was like a big time opportunity, and we played it, and it generated almost 12x returns for us in the options. Okay, so I wanted to, in today's webinar, I wanted to use that as a case study. How when you keep doing the process, how things come up, and how opportunities come on your way, and how you play that. Okay, how we entered the trade, how we executed the trade, I mean, how we followed through the trade, and then how we took our profits, and what are the next steps. All those kind of things we'll talk about in this. Okay. So before we get started, let's take care of the disclaimer. All this information presented in this video is only for your educational purposes. You can use this information in making your own investment decisions. However, all the decisions that you make for buy, hold, or sell is solely your responsibility and not techie investors' responsibility. Okay. So having taken care of the disclaimer, today the stock that I'm going to talk about is GAME. I know this has been a very with the Reddit or this stock symbol has become a notorious symbol. Like, you know, people either hate it or love it. Okay, people have made millions on it, and people have hated it and didn't even play that. And I was one of them who didn't play the first time. Okay, I'll tell you that is also a part of the reason of technical analysis. Okay. Ideally, in techie investor, we don't care what is the symbol. We only look at what are the various, conditions that are satisfying the criteria for us to enter the trade. So that is what we look for. Okay.
Okay.
So yeah. Okay, I think that's so. So we'll do this case study. But before that, I just wanted to give you a brief synopsis.
Sure.
Of what was the trade, and what was it? So this was done on a Tuesday, I believe. It was recommended at 60. We saw the stock price and we recommended it at 60. We recommended two things. One is March 12, 60 calls at 880 when the stock was around 55, right? I remember 53 or 54. We bought 60 calls at 880, and the stock was also recommended. Buy the stock. Okay.
Herbert should work. I think he's still with more lender.
Okay, I'm sorry, it was something in the background. So the stock was also purchased, was also recommended to purchase. The stock again in 2 days, it went to a high of 184.68. Some subscribers were made from 8x from $9. It went to up to $120. The options. Some subscribers were able to take advantage of it and took 10x. But the least exited option price was 55. Like, you know, that was the thing. Okay, we said it is not, and we want to take off our option. So that took us to at least 6 to 7x option. But still, we are hanging on to GAME stock for more returns. Okay. So as we said, the two options were recommended were the options and the stock. So we removed the stock, and we removed the options, and we are having the stock right now. Okay, that's what the idea synopsis. I just wanted to give you what was recommended and what happened. Why was this?
Srini, I have a question. Can you go back to the previous slide?
Yeah.
So was that recommendation based on the technical analysis, and was that made on like February 15th, 20th?
24th, I believe. 2 days. Tuesday we bought it, and Thursday we sold it. Something like that. Last week.
Okay.
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 Okay. Sounds good. So why was GAME recommended? It was purely on technical analysis. Okay. So today we are going to look at that case study. When did we enter, and how did we play the trade, and what will what are we looking forward to. Okay, that's what it is. So now let me pull up the charts so that we'll start looking at the trades. Okay, let me make this big for you so that when I look at this game, I'm going to remove, oh, this is CCIV, sorry. So game, if you look at the, I had a watch on this game for a long time, because what happened is it went from a high of 1715 and it went to a high of $483. If you look at this, this was a very, very big move for whatever reasons, right? Like, you know, it went very high. But usually we don't play this up movement because we don't know where it could head to. But in the technical analysis, always when something gets pulled back, you can always predict where the next wave is going, and even the next wave is going, and the next wave. For those of you who are aware of Elliott wave technical analysis, there are always 5 waves in an up market and 3 waves in the correction. This is in a bullish condition. Whereas in a bearish condition, it is the reverse. There will be 5 waves in the bearish market and 3 waves in the correction. So since game looked very bullish, if you look at here, guys, all the conditions are looking very bullish. Look at this. Though the cloud looks very thin, still the lead span A is above lead span B, and the price is above lead span B. Though it went down, it never went below the cloud. Okay, number 1. Number 2, the lagging span was always above the price. It never went below the price. So definitely it was looking bullish. Now, now if you look at the future, here also it looks bullish. But if you look here on this date, wherever it is, like, I don't know the date, 3/19/21, after March, it's getting to a little bearish. Okay. Now, what we saw is when we entered the trade, so to be precise, somebody asked me, I think it was Vijay, where you entered the trade. The lowest it formed was on 38.50, which was Feb 19. Okay. Now we didn't enter here. Then what happened is, like, then it formed a higher high, and then this is the point I entered, right? That this is the day when it crossed the moving average 10 and the conversion. It crossed both on the same day, and it was somewhere here. So this is where we were. So we were looking at it at 53 or something. If you look at it, conversion also started moving the same day, but that day it was a little bit below, around 48 or something. So what happened is, we bought it at around 52 or 53, like, you know, at 60. So the stock was bought at 60, but the option, I bought it earlier, and we bought this with the hope. Why did I buy this? First of all, I like the gap between this conversion and the baseline. The baseline was at $250. And the conversion was somewhere around $65. So I like this difference. So what happens is, whenever there is a crossover of the conversion, it will at least get closer to the baseline, and then it will try to go there. So this was one thing. So I like the odds that if it goes closer to that means you will get a good profit, right? Because the difference is like $190. So I mean 60. Yeah, 190, am I right? Yeah, $190. Now let's look at the weekly chart. I want to show you the weekly chart. This is how the weekly chart looks. The weekly chart, when I do the Gann fan was also raising. So the Gann fan, I felt, see, if you see here, it went up to this high and it fell down. Now there's a possibility that it can go up to here, this line. But the first line, the 45-degree angle is here. So we thought, okay, at least we should get here, and it hit there. But what I am thinking is, on the weekly chart also, it should hit this too. It should get closer to this line. So that means we are looking at 238 degrees and that one. So ideally, I also wanted to share this with you. I don't want to spook anyone or anyone. This one didn't form when I looked at the Fibonacci, it didn't form a multiple of 90s when it went to 483. And psychologically, when it went to 483, if you take any stock, folks, any stock, if it goes to 483 or anything, then there is a possibility that it can get to that round number, which is 500. So there is always a psychological advantage that this can go to 500. Okay, but we are not looking that far right now. We are only looking at 238, 240 for right now to get out of the, even in the stock. So that was the analysis. And the other thing was this cloud was keeping on increasing. So what will happen is it will reach a point where it may go up and then, so, but one point where we might exit is when this point gets below the cloud. And the last 3 days, what happened was we sold our options. One of our subscribers, some of the subscribers sold here. But what I saw, what I began to see was there was a VWAP. For those of you who don't know what is a VWAP, it is called moving volume weighted average price. What is it? It is used by most of the traders to see what is the best price to buy. It is something like a moving average, but it is much more effective because it considers even volume into it. So what happens is this, there are two kinds of VWAP, folks. One is the daily VWAP, which people use for day trading. For example, if you see in the candlestick 15 minute, the VWAP line, where is the VWAP for this? See, today it closed around the VWAP line. That means this is a very good price to buy. So people always tend to enter around the VWAP line. Okay, this is like daily VWAP. But if there is another thing which is called the moving VWAP, which is used in the swing trading. So this is where we see this cyan line, whichever you see, is the moving VWAP, and we are this moving VWAP is what, so it is like 3 days above this and it is consolidating here. So I'm expecting a little bit bigger move to at least get to the baseline, and then we'll go from there, like, what it gives us from there, okay? And the other thing which I wanted to talk about is the Andrew Pitchfork. This is not very accurate, but it will give you a sense of what it is, where the stock is going, what it is going, and all those things. If you look at this, if I draw this Andrew Pitchfork, it is showing me that the middle of the, usually when you look at the Andrew Pitchfork, the first resistance would be the midpoint of the pitchfork. So if it gets to the midpoint of the pitchfork, that looks like at 500. Again, I'm not saying it is going there, but right now the probability is looking like there is one possibility here. This thing can go down below this line also, okay? So we got to watch and see where it is heading and going there. But for us to make 10x was the simple thing that it crossed over the conversion and it was getting closer to the baseline. That was the only thing that we did here. So any questions, guys, so far? Why we played this trade and what you have any questions? We can answer now.
Srini, you said there's a possibility like it will go down. So you think if it happens, would that be a good point to again re-enter?
If it happens, what? I'm sorry, repeat it.
You said there is a possibility that
yes,
it will
yes.
dip. So you think at that point is a good entry to buy either stock or option if that happens?
It all depends on where it is going. As I mentioned, this one thing I have to tell you is this guy has fallen for 17 days. And he has been rising for 7 days. And tomorrow is like the 8th day, which is a good Fibonacci number. We might, is it a 8th day tomorrow? Let me check, 38, 50, 1, 2, 3, 4. No, 2 more days. So, 5th, 6th, 7th, 8th. So what I'm saying is, I would see right now it is consolidating at VWAP, which is a very good support for it. And if it falls, there is two things you want to watch for. The below the line of the Andrew Pitchfork, and does it rebound from there? If it doesn't rebound and it goes below the cloud, then the trade is out. That's what I would say. Did I answer your question?
Yeah.
Okay.
Yep.
So it all depends on how much it rebounds. Most of the trending stocks tend to rebound from the bottom of the Andrew Pitchfork, unless they go by. But if it rebounds from there, then there's a good possibility that it can go there. Okay, that's what it is. Okay, any other questions?
I have a question on the Andrew Pitchfork. How did you draw it? Did you do the topmost and bottommost? Is that how you drew it?
Oh, the pitchfork, you mean?
Yeah.
The pitchfork is same as Fibonacci, Dipali. All you have to do is wherever
top and bottom. Okay.
Yeah, the top and the bottom. Yeah, the 3-point fork actually.
Yeah.
That's simple.
But then where do you start your, it doesn't matter where you're starting the bottom line.
The bottom line, usually what I do is I go here and I see what happens is sometimes I go to the line charts and I look at where is the bottom, right? Real bottom, swing bottom, basically, swing low. That means if you see, this is the trough, right? Basically, if you look here. So I draw from here to here. People draw it different ways, but I prefer it this way so that I get them, I'm okay this way. Then what happens is you can get a bigger move, those kind of things. The bigger you take, the bigger move you will get, but you have to wait longer. The smaller, it depends. Any Fibonacci will work, but as long as what you're comfortable with, that's what.
Right. I actually tried to do this with snow. Can you just bring up snow? If it's okay with everyone. I tried to do a pitchfork with that and it was showing me that it's going down. So I was like, okay.
Okay.
But we'll do that later.
So again, what happens, right? From wherever you draw, what is going to happen is all it depends on the time frame also, right? So everything will be equally coordinated, basically. So you got to then measure all those things and then do that.
No, but I don't know what that means.
Oh, okay. For example, if I say from this Fibonacci I drew here, right? Now it has gone down 17 days. Let's say if you had drawn from here, right? Now what is happening? Now your line is getting lower, right? Basically, like, the Fibonacci line is getting lower and this is getting higher, right?
Yeah.
Are you seeing what I'm saying? The more I do this, then what is happening? It is going all the way here. So is that the right, then what you have to see is this possible? You have to use, what I'm saying is no one indicator will give you the right thing. So then you have to see, hey, is it really possible for it to go to this level? That is what you have to see from the Fibonacci retracements and the GAN squares and all those kind of things. Am I making sense or no? Everything, see, well, that is what we say, right? For example, I'll show you something like, let's take one example. If you take crisp, right? Let's take crisp only, right? If you take purely this candlestick charts, right? It is here, right? The swing bottom. But if you see hey, if it had gone down, will it go stop here and go? It did stop here, but then it didn't go, it went further. So what you have to do is you have to dynamically adjust and see what is the next one it is looking for, right? So for me, I was looking for that 12.5% angle or 20. I knew that when a stock moves big, it will at least come back to 25% retracement, okay? So I knew, so I adjusted my Fibonacci to that. You know what I'm saying? Does that make sense what I'm talking about?
Yeah.
So so it depends upon what you think. See, whenever a stock moves big, right? All the stocks give up. For example, AMC, you take up AMC, which moved big. What happened? It came back to 25%. You see that? Then you take, who else moved big? For example, who else moved big recently? I don't know.
Snap moved, Twitter moved big. It should come back, right?
Yeah. So basically, they'll at least give back 75% of the value so that you can enter back at 25% retracement, and then they'll move back. For example, you take Docu, right? Popular example, Docu, some days back, it went to 290 or something, if you remember. So look at that. It is like, if I draw this line, it came back to this and it also came back and went low too, right? So that's what it is, see? So 12.5 is very more accurate, but 25% is okay, you won't lose much. So 12.5, then it will go back up and it will form a higher high. You see that? See, when the stock especially moves so fast, it will always come back down fast also. That's what it is. So you don't want to buy in this move, but you want to move in the third wave because that wave will be bigger and will be more consistent. You know, now it is definitely want to go up, then you know, okay, this is good. You know at least what is your target point is somewhere greater than this, right? That's what it is. Hope I'm making sense, but if not, you will get
Can
it.
we look at snow?
Yes, I was about to talk about that, but thank God, yes. Okay, snow. Look at it, classic. Snow, I drew the line today only because they have earnings on March 3rd. So basically, you see this, the snow went from a low of 232 to 429, right? Look at where it ended, 12.5, exactly. So basically anything less than 25 is good to enter when you see such a big moves. But if you see this, what is going to happen is usually when I see this kind of big moves, they take a long time to consolidate and go further, and then they could go up. But when they go up, they'll be making a bigger highs. So they will be going to, for example, if I take this one, I knew that it was going to come back because it didn't touch the 441 degree Gann square angle, which was 429. So that means I know it will definitely have to go to 441 and above. So that means that's what 450 is the next target for snow. But how long? It will be taken quite a bit because of the number of days it has fallen down. So if you take a leap call, it will be perfect for you. I think Srinivas is good at it. he can guide us. Rampali, are you here?
Yeah.
So you can
If
tell us
something-
450 is the target for you. You asked me, so that is what it is. So,
Yeah, fine, man.
but it's going to take considerable time. Yeah.
Long term, we are looking at 3 months, 2 months, or what kind of numbers will days?
You take the number of days, man, into at least put 3 times. That's what I would suggest. Number of days it fell, and take number into at least 3 or 4 times.
Can you analyze and let us know how long? Just
so this
we
might
don't
have
know
fallen.
charts yet, right?
Let's see. This fallen from December 8th. Then it fell to, what is the date today? 28th. So almost like January, February, 2 months, 60 days, 16 to 4, 240 days. So you're talking about 6 months down the line. Yeah, definitely that will be a good time.
Excellent. Thank you.
You're saying 6 months down the line, it's going to go to 450. That's what you're saying.
Yeah. I mean, I'm saying give considerable time. That's all I'm saying.
Yeah. It's not going to be quick. Yeah.
You don't want to say, hey, I will get 415 to, it may go faster also. But the other way to look at it is like if you do the Andrew, but again, these Andrew Pitchforks are a little bit like, this will tell you a little bit, but not like, sometimes they can go really fast too. That's what I'm saying. See this one.
That's exactly what I did. And I was like, it looks like
I know,
going...
but I wanted to be, but these things are not that accurate, Andrew Pitchfork. But because the other thing I would like to use is the Fibonacci time zones. I think those are more accurate. For example, again, as I said, Deepali, there is no single indicator that is accurate. Only the combination of those things will work well. Okay. So you need to consider all the factors. So if you see here, it is like if you this Fibonacci time zone, what I've done is I have drawn it from, if you see here, I have drawn it from this guy, like wherever it formed the last, and then the next one when it started falling down. Did you see this? It started raising here. Today is the new thing. So this is again Fibonacci. So 13, 21. 21 is 34 days. 34 days is the next cycle. So at least you want to give that 34 days cycle for it to go. Does that make sense what I'm saying?
Yeah.
So this is 34 days, 34. And one more thing, when I say 450, it actually can go to 500. This is the target actually, 505. This is the target it can go to. Okay. All right. Good. Any other things you want to discuss?
Hey, Srini. Hi, good evening. My name is Mahesh Ravanutula. Was
Hi,
referred
Mahesh. Good to have you here.
Thank you. Hey, I'm by no means, I don't know anything about options at all, right? I mean, pretty much a newbie. I've definitely followed that WhatsApp group. I've looked through your tech investor site for a while now, I mean, a couple of months at least,
Okay.
right? Going back to your whole conviction on GameStop, right? I mean, I'm curious, right? I mean, for sure, I'm not a technical investor by any means, right? And I don't even do options as much. I mean, definitely having joined the group and following some of the stuff you've been discussing and even posting on your website, right? I mean, I've definitely got curious. I've started reading a little bit and further like that. But specifically, I mean, you're using the whole January event from whatever the big short squeeze, all these Wall Street, Reddit investors and stuff like that. I mean, I would have thought that was almost like a red herring, right? I mean, that was a once in a time event as such. I mean, I never expected that, hey, something similar to what happened back in January would actually happen again. I mean, there was a short squeeze. There was some sort of at least a fuel to that whole thing, right? I mean, strictly looking at technical without like some sort of an event or some sort of a trigger, is that really even valid as such? Right? I mean, now you're saying, I mean, I'm again, this is all jargon to me, right?
That's a good question, Mahesh. But the thing is, see, there are two kinds, right? I always tell people there are two kinds of analysis that happens, okay? One is fundamental analysis, right? Fundamental analysis, like, let me ask you this question. How do the analysts come up with the numbers saying that this will go to 270? Have you seen this in the fundamental analysis? Whenever there is a bad event, they'll say, oh, okay, now they will drop the price to 65 or something like that. Or when they say, hey, when there is a good thing happening, they'll bump the prices to something else, right? Like upward. How do they come up with these numbers? Have you ever thought about it?
I mean, see, if you read through any analyst's post, right, at the end of the day, they go through multiple things, right? I mean,
like what?
Future earnings estimates based off of the revenue, based off of whatever is in the pipeline, any new products, any mergers, I mean, there could be multiple things. Obviously, you'll have to start adding based off of, okay, here is your total addressable market. This is what they've tapped into. This is what they're working on. I mean, obviously, that any analyst research should come with some amount of, I mean, yes, speculation, but reasonable speculation, right? I mean, it's based off of here is how they did the last quarter, last year, with these number of users, if it is like, right? I mean, whatever. I mean, we're in a tech company or a fintech or so there is a little bit of a basis. Yes, they are kind of assuming, but still they're using some facts and a little bit of whatever the, right? I mean, the CEOs or whoever are doing these quarterly calls are actually projecting. They use some of these to say, hey, we do come up with this revised numbers based off of this.
Yeah, you're right. Correct. I'm sorry. Okay, you're correct, Mahesh. Definitely, that is where I'm coming to. Basically, the analysts, what they do is they do the analysis on the asset itself. When I say the asset, the company, right? They look at what they do, what their earnings are, what is this thing, how do they provide, what is their earnings to sales value, you know, the price to sales value ratio, all those kind of analysis they do, and they come up with a price, right? Now, that's great. I know that they have suggested this price, but how do I know when will that price be reached by a stock? That is where the technical analysis comes into play, right? For me, for example, game, when it went to 483, I knew it was going to 500, as I was mentioning before. It's a psychological point. You take any stock, for example, Tesla. Tesla, when it went to 900, it is, when it went to, before it went to 1200, right? It was at 900, then it retraced, and then it went back. Now, when the analysts, when it went to 900 or something, they were saying, oh, it is going to 1,000. But as a technical analyst, we knew it was going down, and we betted it on the puts, and we took it out, right? Now, that is where technical analysis comes into play. Now, to answer your question, yes. How do we predict that? Based on the historical data and based on the historical patterns. So what it means is like, if that, for example, I was showing you some time back about the Ichimoku. Did you attend last week, Mahesh, by any chance?
I did not.
Okay, no worries. So in Ichimoku, there is something called as a lagging span. This is this gray line you see here. This is the lagging span. It will tell me if this price is about, this is 26 bars behind the current price. If this price is 26 bars behind the current price, and if this is above the price on that day, then that tells me that the trend is bullish here. So what I'm telling is, all the trends are repeatable, all the patterns are repeatable. It is the technical analysis is all about identifying those repeated patterns and then applying them and then doing that. But again, as we said, sometimes we may be wrong, but there is a heavy probability that it could be correct. Just like how analysts predict and they could be correct, right? That's what it is.
Okay.
Did I answer your question, Mahesh?
Yes, you did, right? But I mean, I'm also surprised the amount of conviction you should have on the technical analysis as such, right? Because, I mean, all said and done, I mean, I don't think you're strictly, even for fun's sake, you're comparing GameStop to Tesla as such, right?
No,
I mean,
so to be honest with you, for me, the stock symbol doesn't matter. Basically, it is about where all it matters. I mean, in technical analysis, it's all about that, right? Like, it's all about where the stock is, where it is heading. That's all it matters. Why do I care? The stock symbol is just a matter of for the execution purposes, right? I mean, think about it like this: whether it is Tesla or whether it is GameStop or whether it is Apple, the patterns are there going to be revealing there, right? I know I don't want to spook up anyone here, but
right.
That's how it is. Unfortunately, that is how it is. So so for me, it doesn't make a difference if it's a GameStop or a Tesla, as long as the pattern shows up. That's what I was trying to say.
And hi everybody, this is Sanjeev here.
Hey Sanjeev, how are you?
Hey, I'm doing good, guys. Hey, I am Mahesh. I'm a relatively even more newbie than you. I mean, I just joined this weekend. So just one point, even though I don't know as much as like most of you folks here, one thing I can also add is this. If you look at GameStop, for example, right? This Reddit forum, like what happened in the Reddit forum? There was one guy who said, let's all, get together and pledge to buy and all that, right? And things like that also happened, right? So there were a lot of people also involved, right? Who actually started, also buying all of them, and that's what happened, right? So similar thing I feel also happens on this technical analysis. I mean, when we do this technical analysis, which is like anybody can do it, right? Who has the knowledge can do it, right? So if there are enough, they're not just like us looking. There's so many folks across looking at these indicators and looking at these patterns, and they think, yes, you know what? Now I see that the high probability is going to go up, and there'll be so many like-minded people like that, right? And that also can, make a little bit of difference. Very similar to the Reddit one. So that's one point I was.
Very good point, Sanjeev. Thank you for that. So to answer that question further, Mahesh, let's say, for example, the old traditional way of people didn't use Ichimoku or anything on the New York Stock Exchange floor or anything like that. All they care about is the moving averages. So if you look at the moving averages, for me, this was for any trader on the floor, all of them look at moving averages. So Sanjeev has a very valid point. When multiple people look at the same technical indicators, what happens is when it breaks up, it shows up in all the screens, and then they end up buying it. As the buying pressure increases, the stock price increases, and then it goes on, right? For example, you might have said here, let's look at here too. The people bought it here at moving average 10, right? So this is where I'm talking about in January, when I'm not even talking about right now. So the January also the same thing happened. The MA10 was 1981. They picked it up here. And as long as it stayed above that moving average 10, they rode it. Are you getting the point? So if they rode it, and then once it broke through this moving average 10 here, at 154, they got out of it, right? Or some people might have been more aggressive. As soon as they saw this bearish candle, they got out of it. So there, I know personally a few people who wrote like that, and they made a lot of money. So that way they took it off to, at least they would have sold it here in somewhere on this candle, basically at 300 or 400 or whatever you call it. So a lot of people look at it as, Sanjeev, that's a very, very good point. A lot of people do technical analysis and look at the same things again and again. Yeah.
Hey, Srini. Subha here.
Hey, Subha, how are you?
So, hey, I'm good. After a long time, I'm attending this one of our session. Always fun and knowledge, educational. Thank you for hosting. Okay, I have extension question on the GME. If I ask specifically for this Friday, March 5th, how is it looking? Like, if I wanted to try 200 call, so earlier in the day it went up to 130 and it retraced back to 113 now. So how it is looking now for this iteration of?
To be honest with you, I wouldn't buy anything for this week. The reason why I'm telling is, you look at the Feb time zones, basically. The Feb time zones actually collided with today, right? Today it started rising today here, right? So the next one is like 13 days from now, basically. So what happens is, whenever you see this Feb time zones, as it increases, right, there'll be half days it will try to go up and half days it will try to go down. Now, if you're shooting for this call, if you see a really bullish candle tomorrow, like today is not a very bullish candle, I believe, basically, like an engulfing candle, maybe you can ride for the next 2-3 days. Definitely today is the 6th day. So fifth day of the Fibonacci fell down. So maybe 2 days it might go up. But I would definitely recommend you to take more time, basically, than because you're like shooting like in the dark, right? You don't know what is going to happen, right? Unless you see extreme cases. Again, as I said, the baseline is a very critical factor. It may not even touch the baseline. The baseline is 260. So it may go close to that, like 252, 255. 250 is definitely, that's something that we can shoot for. But after that, what happens, God knows. You know what happens. It might either retrace back and then it goes back, you know. It has but definitely the cloud. But one thing I wanted to show you here is, this cloud is getting bearish here on the after the 13th day, 13th time zone. On the other side of the 5th time zone, you see that the lead span A is getting below the lead span B. So actually the move happens before that, right? That's what it is.
Okay, so we're talking about around somewhere around the 20th. We should be careful about. Okay, got it. Thank you.
I definitely don't you ever. One thing I would suggest is, don't play for the March 19th expiration calls. Definitely play for March 26th if you want. But because that is where people will try to pull you down, and you know, those kind of things will happen.
Got it. Thank you.
Yeah. Options, one thing you guys have to be very careful, especially the monthly. We've been burnt up quite some time, and I resolved not to play any more monthly expiration options because they are very, very tricky. There are a lot of big players who come and try to pin the price, you know. For those of you who don't know pinning, on Fridays, what happens is people make a lot of money, tons of money, by pinning the stock to a particular price. For example, a whole number. For example, if Apple, they might pin it to 130 and they will not make it move this side or that side. So what happens to that is, the option prices, if you are especially on the buying side, what will happen is your prices will start dwindling so much, and the time expiration is gone, and you will lose money very, very quickly. So that is one thing. So monthly expirations are very, very, you have to be very, very careful unless you are sure that you will hit your targets in the first 2 days. Hopefully that answered the question. Any other questions, guys? Any other stock? We have 10 more minutes. Anything that we want to discuss?
it's really some really good questions, and appreciate you.
So, sorry, can you be a bit louder?
Yeah, I was just telling the group some really good questions, and appreciate you tackling all the questions.
Your voice is low.
And I don't know, my connection is bad maybe, but just appreciate you kind of sharing insights on this. Folks, if I know some of you are members already, if you're interested in joining, definitely visit the website and check out the service. We appreciate you guys kind of joining these webinars and asking some really good questions.
Yeah. Sir, one more thing I wanted to tell you, everything in our service is very, very transparent. Basically, our returns and everything is on the website. Just wanted to share with you a little bit. Why am I not able to click this?
And while you're bringing it up, yeah, this is Sanjeev here again. So yes, actually, today was the first day I actually saw the option, the watcher, and that is actually true. I mean, it's very transparent in the sense like the price I think that you put for a couple of them today. I noticed like, it's not like, you pick the lowest or anything, you just picked actually the most realistic and practical price. Thanks for that. That was really good.
Sure. Thank you. So one thing I wanted to reemphasize to anyone who are coming into the services, definitely there's a lot of misconception out there that this is a quick rich scheme. It is not. And definitely, but what we say is, what is options is all about it. Options is all about leverage. For example, if you're playing with 100K and you want to make, leverage the options, that means you can maximize your returns. Whereas with a stock, you may not be able to buy that much. I mean, I'm not saying that you will be able to make gains or not, but the gains may not be that much. But on the side note, options are kind of like you need to know what you're doing, and you need to be willing to take some losses so that you can preserve your capital to make some gains, the later gains. I just wanted to bring that up. So if you go through these, we have a lot of losses too, but we were able to spring back and get more returns back. But it is all about managing your capital, taking care of your risk management, and then the results will take care of itself. So I just wanted to. So this is here. It is available. Everything we have, but for both 2021 and 2020. So we have here. So it is under the returns. So you can definitely take a look at it. Okay. Yeah.
Right. Can I ask one quick question while we are on this sheet? This is
Sanjeev.
Yes. So the quick question I have is like, see, here you have an exit date, right? So I noticed like in your previous recommendations for options buy, right? You actually had like a detailed one where you said like buy, the certain call or certain puts on certain days for certain ticker, right? And then you also had like an exit strategy, like in like a paragraph kind of a thing. But I noticed like today's that you had were more like, just like a one line, and then you had a target price point. So for the exit strategy for these that you released today, right? Is that like watching for that to go up to that price and sell that option? Is that what the exit strategy is?
Yeah, that's a very good point. What is happening is I give that exit strategy, but I can start giving that exit strategy. The reason is anyway we were notifying people about it. So we thought because it was more technical details about when to exit, like 2 days below the moving average and those kind of things. So since some of them didn't have the charts, it didn't make sense. But if you guys like to have that and want to use it, then I can start giving it again. That's not a problem.
No. Actually, even I don't have that information, like what you mentioned, the moving averages and all that stuff. So for me, like for example, like if I were to exit, like let's assume today, whatever positions you gave, right? If what is the exit then when do I exit that? Are you gonna send us another notification saying that you got out, or?
Yes.
Okay.
So what will happen is, the reason is, as I mentioned, everything mentioned in the channel will be tracked and will be updated for you.
Okay. Wonderful. That's great. Yeah. Thank you. That's all I have.
Ashwini, can you quickly go through Amazon ones, please, if you don't mind? We still have 4 minutes, right?
Hey, Srini, before you get to that, I know we had talked about, if let's say you have 10 options and the price is increased by 50%, you take half off and then let the other half ride. Now, not every option is going to go 100%, but like in order to, kind of capture the profits, sell half of it and then let the remaining half run, right?
Mm-hmm.
Now that's sort of like a good rule of thumb. It doesn't apply everywhere, especially for busy professionals who may not be looking at the market every second, may not be able to pay attention to every alert. I think that might be a good protocol to follow.
What we were saying was, for the subscribers, what we are suggesting is, please give us your feedback. I know since this market has been very, very volatile, the prices have been going up and down, and what Diva is mentioning is, we talked about, this is one of the approaches that we can follow so that we don't have to, like Sanjeev, you asked that question, right, sometime back. We can say something like, we want to do like this. For example, we can say, hey, we will take off 1/3 of the option at 50, 1/3 of the option at 100. And then if it is not going anywhere, then you can put a trailing stop on it at 100% if it's going higher than that. And on the stop loss, you can put like 75% stop loss. Will that work? Do you think that's a good idea? Because especially you guys, we are all busy professionals, and do you think that will be a good, I wanted to get your feedback, think about it. And basically in that way, everything will be automated. Anyway, we tell you to remove 50% right now at 100, at a double. We try to give all our trades that could give to get to double, but always there are chances that it may not. So so in that way, what happens is, we can easily manage the trades and we can do that.
But Srini, there is a big problem here. These days the market is so volatile. If your stop loss is in the beginning itself, you could get
what I meant by that is not like don't put the stop loss there, but at least you should see. It is also, but think about it like this, right? It is about your portfolio management. If you
I agree, but what is happening these days, as you know, it goes down in the morning, and by evening comes back double. So
yes.
And that's like a you are hitting your hammer. So with a hammer, because what the hell? I mean, I'm saying that's why let's not follow the general rule like that. But I think we need to have some technical, but at the same time, of course, it's individual risk. But this market, it's not easy to recommend a particular rule to you.
But at least I understand that, Srinivas. That's why I didn't bring it up. But the one thing what I wanted to say, at least we should take away the profits at significant levels like 50, 100, 150. That way, what will happen, at least when you take away at the 50% and then move your stop loss to this thing, you're not losing anymore on that trade.
Yeah, I just want the same thing to reiterate for the listeners also. What Srini is saying is, first to target your profit and then go for stop loss. And but in the beginning itself, stop loss could be you want to put it pretty high. If you don't want the first one itself to be stop loss at a little bit low side, because it will trigger and then you are gone. Basically, you're out of the picture.
Yeah. So in that way, what happens is you can at least make sure that you are out with 50% profit on your trade, and which is usually we hit in like one day. That's what in most of our picks or ideas, we easily hit 50%. There's no questions asked about it. But the thing is, it again goes back. Then that is the challenge when you have to manage. But as Srinivas was saying, this market is very, very volatile, and it might even come back from there. So that is a trade-off. Why I'm bringing this up is because sometimes people are very busy and they miss out on something. Then you want to have there something in place. That's what I wanted to say.
So the one I recommend normally, Srini, in these kind of cases, I normally recommend somebody to immediately sell when you reach some target, right? If you don't want to release yours, sell some of the higher ones. So outer ones, that way you still have a problem.
It is not easy to say that, Srinivas, because why I'm saying that is each person is different.
Right.
So
it's very complex. It becomes very complex.
On their, what do you call that? I don't know. I'm not getting the right word for it, but
risk appetite or something, right?
Yeah, risk management or their appetite for risk, whatever, right? So what I'm saying is some people might say, hey, 50% is better than having sitting at a loss, right? I'm okay with 50% profit and I'm out.
Absolutely.
Some people might say, hey, I want 100% profit, those kind of things, right? Each person is different. So it is very difficult to generalize these rules, but these are the options that are available. That's all I'm trying to say.
That's right. Hey, can we quickly look at, because we are out of time, can we look at the Amazon quickly?
Which one?
Amazon, remember we were talking.
Amazon.
Because it's been falling, so I wanted to see if there is an opportunity to get in anywhere.
Amazon, it went below the cloud.
Bullish, actually. Sorry, bearish.
Cloud looks
really bearish.
But the lagging span is still lagging. It's below the price. I'm just mentioning all the things. And but what is happening here? 3086. Then what is it? This is 3036. That is good. It went below and it is rising. Did it form a red dog reversal today? 3047. Yeah, it looks good. It looks bullish. And let's see where it is going. Where could it go? It could go. The first stop is definitely the bottom of the cloud, which is 3185. Definitely. And the second, so definitely one thing in the Ichimoku, right? We can use this conversion and the baselines as the support and the resistances. So let's look at for a long-term thing. Let's look at the weekly. I'm going to draw a Gann fan and see where it stands. It's a mixed thing actually. You see here, conversion is below the baseline. I mean, this is good, it's bullish. And on the weekly chart, even the lagging span is down. But I still feel in the long run, it went to 3036. That means, did it touch the cloud? Not yet. Oh, I was thinking it would go, looks like something. Did it touch 2950? I was looking.
It didn't go there. It didn't go below 3050.
It wants to touch the lead span A before it goes up, I feel. That's what my gut feel says. It may touch the baseline here, and then it may retrace back here. So I would like to buy it at this point when it gets here.
29 somewhere. Okay.
3000, below 3000 is a good target, I believe.
Excellent. Thank you.
Maybe I'm wrong, but it looks like it wants to go here before it rises big time. Okay. Yeah.
So one way, the only way, sometimes the only way I can tell, sometimes Srini, what happens is when you put an order, right, some of the orders don't get executed at all. That tells that, you know, I don't know, somehow that's my gut way, but we'll talk about that later. It's already late. So thank you. Thank you, Srini.
Yeah. So
some of the orders supposed to execute, some of the calendars supposed to execute. It did not execute today. I can tell looking at that it wanted to go down basically.
Okay.
The calendars calls went easily executed, and calendar puts did not execute at all. So it's a big indication that even the stock was dropping or even going up, it didn't move. So.
And one more thing, Srinivas, you want to look at this VWAP line also. Basically, the VWAP line will tell you once it is above this line, it might give you much more clear indication that it definitely wants to go up.
Got it. Okay.
So this VWAP line is above the cloud, basically.
Right.
So this cyan line, if I'm talking about, are you able to see that?
Yeah, of course.
So the cyan line, if it once it crosses this path, then you might see some good move. Definitely, it has a $3,600 move to the move to 3,600, but it needs some time. That's what it is.
Great. Thanks, Srini. Thanks so much.
But by the way you buy, like if you buy the leap calls, you should be fine.
Yeah. Thank you.
I think 3,000.
Let's hope so.
It should be fine. It should be gone. It should be going there. See, usually, traditionally, March is not that a good month, I believe. So by March and April, May. When is it? March is okay. May is for this thing. XLE, the prices, right? Am I right, Srinivas?
Yeah, what are you talking about?
Traditionally, seasonally, the stock market, when does it fall, the corrections?
It's end of March, right? So March to
end
April.
of March, okay. That's what I said. So
Yeah, actually, Amazon
okay.
and...
I know that for sure. April is definitely, we want to be very cautious.
I know.
That's what.
Hello?
Yeah, okay.
Hello?
That's, okay, guys, we are on the top of the hour. So shall we wrap it up?
Hey, are you able to hear me?
Okay. Thanks a lot, guys, for joining. Have a relaxed evening then.
Thank you.
Thanks, Srini.
Thank you. Bye.